Hey everybody, this is Copycat Trading and my name is Brian. Today is January the 12th, Friday, January 12th, 2024. And here is a daily brief on the market. Just want to give you an updates. And of course, this is the end of the weekend. It's very interesting. The fact that the markets kind of pulled back a little bit today, and you can see by the spiders, that's actually supposed to be a red candle. I don't understand why TradingView cannot get this right whenever you're not signed in, that they can't get the candles right. This is a red can, should be a red candle. It's not a green candle. So it was not a up day, except for just a little bit. We eked out just a little bit. As you can see, 0.07% up day, and we actually had fairly low volume. Even with the low volume, we could not get up any higher, but we only had 57 million shares, a little 58 million shares by the end of the day, and that includes the pre and post market. So not a lot of volume today, and we still didn't go up very much. And I would imagine that everybody was kind of on hold. We got the weekend coming up, and no new buyers are willing to step up before the weekend, especially with all the turmoil going on in the Middle East. Now, there's some interesting things going on here in the chart. Number one, we've got an ascending wedge into resistance up here. This is your all-time highs, 480, 479.96. And we have some bearish divergence on the RSI. Now, that doesn't always mean that it's going to go down, of course, but this is, it should be just taken in consideration with the rest of our trading. If you can see, whenever we peaked in this point right here, whenever we were coming up, we had the bearish divergence happening there as well on the RSI. So it's just something to take into account here, and that bearish divergence as it was occurring in this area right in here was just telling us something was not right. We had a peak right in here, and then this peak was much higher, but it wasn't as high here. And then as you can see, even whenever we looked at this particular peak over here, when we draw this back to this RSI here, this made a high and then a much higher high. But you notice that whenever it got to that higher high, it was not, it was diverging quite a bit. It did not make a new higher high on the RSI. So whenever you're looking at this area over here and you're seeing that we make a peak right in here, and then we make a higher high right here, but yet not on the RSI. The RSI is considerably lower. You can, that ought to throw up red flags, make your ears perk up, kind of if you were a dog type thing. All right, so that's the spiders, and the spiders had that little bit of a gain today, but not by very much, and we've got this rising wedge connected the bottoms and the tops here. All right, so that's the spiders for today. As far as the Qs go, the Qs had about the same day. This, again, should be a red candle. This is not a green candle, and it's finished up 0.05%. Wasn't very much to the day, a lot of chop. So if we bring up the 10 minutes going to look the same on both the spiders and the QQQs. But we opened up higher here, we came back down, and then we just went up and down across the flat line over and over again. It looked like sometimes we were going to sell off, but nope, they brought it back up. And of course, the last candle of the day, nice and green, with 2.7 million shares in there, traded on the QQQ. And spiders, very much the same thing, just a lot of chop back and forth. Nothing really to speak of, so to speak. PPI did come out this morning, and it was in the negative territory. So that actually bodes well for the CPI going down in the coming months, but we'll have to wait and see what happens as far as the fundamentals go. We're just going to look at the charts and do what the charts tell us. So we'll just see how that goes. As far as IWM, that candle is correct. It was red, and IWM, as per its reputation, was weakest, and it was 0.17%. Now, we got to watch the IWM because the IWM, I haven't said this in the past, but it is usually a indication, it could be a leading indicator of what is to come in the markets. And people have looked at it in that way in the past, and we just don't know. Again, that is a fundamental, more of a point of view. You can kind of take it as a mix between technical and fundamentals. But as far as that goes, we do have a down day in the Russell, and it looks like it is making a bear flag. I think I've showed you this before in the previous videos, but looks like it's making a bear flag down and then bear flag. So we could be looking at a lower numbers on the IWM. It just got down to this 20 MA and just have not been able to get this bounce, and so we'll see what happens over the coming days. All right, and then gold was eked out of a gain of almost 1% today, heading back up towards that neckline of the pseudo head and shoulders. I will say, not a exactly perfect head and shoulders, and the reason why is because the neckline is ascending, and that's an inverse head and shoulders. But the reason why is because the neckline is ascending, and when you have an inverse head and shoulders, the neckline should be descending, not ascending, and just exact opposite whenever you're talking about a neckline of a traditional head and shoulders. like what is on silver. And silver's has that inverse head and shoulders over the bigger picture, but over the smaller time frame, we have a regular head and shoulders, and it is an ascending neckline, which is the way it's supposed to be. And notice where we closed today, right on the neckline. I don't even think that I can really tell whether or not we closed above it or not. And that is so close that even if we did, nope, we closed right below the neckline. But remember, I told you last time that if we close above that neckline, then that means that is a failed head and shoulders pattern. And normally, I had a teacher teach me one time, the best moves in the market come from failed moves of patterns. And here we are, this could fail. And if it does fail, then we may head up and hit the neckline of the gigantic inverse head and shoulders, which would send us up considerably higher. And we measured that last few times, so I'm not going to do that today. All right, and then natural gas. Natural gas just won't quit. Natural gas has come up to that level multiple times, pierced it, and come back down. It came up to this level multiple times, pierced it, and came back down. And so you can see the volume increase in here with the buy-up. I'm not sure if it was the winter storm that is in the United States right now that's causing all the interest or what, but we are at historic lows on natural gas, and so, or some of the historic lows. So if it continues chopping all the way to this trend line, I may take it there because that's a lot of bullish chop. And so this is the end of this week, so we'll be making a new candle on the weekly, and we'll see what happens. If we continue to make a bullish pattern, then I'll probably jump on board with a few more shares. I'm way down in here somewhere averaged, and I may jump on with a few more shares to ride it up. Because I think natural gas has got quite a ways to go. All right, so that's natural gas. U.S. oil. Oil had a big worry and a concern over the Houthis in the United States and the U.K. bombing the Houthis. And so oil took a big spike, which is kind of unfortunate because I got out yesterday right at this high. And it took a big spike overnight, and then it came back in for the rest of the day. So they're just not believing the trouble is there just yet. As far as the investors go, it is still chopping in this wedge pattern. So at some point, we're going to get to this wedge, and we'll see. But usually these ascending wedges at this kind of angle usually break to the downside. But it could, again, be another failed pattern, but we'll just have to wait and see as the time plays out. Bitcoin was the story of the day. And of course, those ETFs were released yesterday. We talked about that, and the ETFs caused a pop and then a sell, come back in, and the selling really continued today all the way back through the wedge pattern. And we have officially closed below the line of the wedge pattern today. And of course, you could redraw it and bring it down like that to where it's not officially closed on the wedge pattern, and we'll just give it the benefit of the doubt. But it still pierced that wedge. So it may come back into this wedge and just pop back and forth again like it was doing. Or if it does sell off, then we'll be coming right back down here. This will be our first level of support. And then in this area right in here, we'll have support as well. And in the middle of this, I believe, is a Fibonacci retrace as well. So you've got several factors in here telling you technically that we should get a bounce at least a little bit in here, depending on how much the volume is. But you can look at the volume of the last candle, of today's candle. There's a lot of selling. So it was definitely a sell the news event. And I don't know whether that's money rotation or what's going on, but big selling event. And then, of course, if it goes up again, you've still got this resistance right up here at 50,000. As far as the SMH, all the semiconductors came back in today. They weren't real active today. They weren't the star of the show like they have been in days past. And they're still looking at their all-time high. We'll see what we do, but this is significant that this week did not come out and take up the all-time highs of the semiconductors, and that we may be making a lower high. And we'll see what happens with the semis, but if they come back down, this is still going to be good support, and all the way down to here is going to be some good support if it comes down. And of course, the 50 MA is not going to, it's going to be minor support because of this big bounce. As far as Apple goes and the Magnificent 7, Apple hasn't really changed since yesterday, just eked out a small gain of 0.18%, not very much of one. I took that Apple trade, like I told you, at the 200 MA, and I'm just waiting for probably this gap to get rid of half of it if it gets up that high. I've got to stop at break even now, so I'm not going to lose any money on that. Tesla, I did enter today on a small trade. We actually hit a 618 retrace between this point and this point. I'll just go ahead and show that so that you understand what I'm saying. And between this point and this point, we had a 618 Fibonacci retrace here. I waited for the pierce, and of course we didn't even open until here today, so I actually took it a little bit down here, and then we actually hit this support level down here as well. For further adds, what I would do is I'm going to go to the 75% retrace or the 786, probably between those two, and maybe even this upsloping trend line, and then of course there's quite a bit of support in this area as well for just a small bounce. This is not going to be a long-term hold. I would wait till probably I got down to the 200 or the 195 before I started the long-term hold of Tesla, and I am interested in doing that, but at this point in time I'm just going to wait and give it a little bit more time, see what flushes out in all these news events. NVIDIA looks like I drew the line perfectly, although I know I didn't. Remember, I told you that these upsloping trend lines, or these trend lines with the upper bounds, is very unpredictable because it just all depends on how high the rock is kind of thrown. But if we do a measured move, if we say this next move is going to be just like this move, then we still got a ways to go on the move. If it matches this measured move, then we'll be coming up around 585, somewhere in there. That would just be an upside target, not a shorting opportunity. But that would be kind of an upside target there if it was a measured move and was going to match this move. And targets, or excuse me, the market loves to mirror itself, so that very well could be it. But no matter what, it poked above this line today, so I'm actually going to take the channel of ours and say now that this is the upper range, and we'll just see what happens, whether it comes down or whether it continues to go up. It seems like it defies gravity, but we'll see NVIDIA. All right, there's Microsoft, and Microsoft, like I told you the other day, it looked like it was breaking out of this wedge pattern, and boy, did it break out. And this is probably the retrace that it got yesterday. And it probably retraced up here, and if I had to draw this in there, I'd say it probably right there matches. It probably retraced, and then it's shooting up again. I'd felt much better if it would have retraced back to here before it shot up again. I was going to buy on a retrace, but if it's not going to give us the opportunity, then it's not going to give us the opportunity. Then Meta is looking at its all-time highs right there. Oh, and Microsoft is in its all-time highs already. But Meta's looking at its all-time highs right there. It's poking up towards that, and I would imagine that it's probably going to be trying to reach that in the coming week. We'll just have to wait and see what the market itself does. And then, of course, if you come back down on Meta, you've got the gaps as resistance, and then, of course, this high pivot as well. Netflix is looking at its all-time high as well. It had a negative day or down day today after this doji candle, really nice doji candle yesterday, but we'll see what happens. All right, lastly, Google. Google's the last one on our list, and Google has a nice bounce off of the support of that trend line, off the 20-day MA, and next stop for it, of course, is there might be some stopping points along the way before it gets to its all-time highs, but you got this pivot point right up in here, and these two pivot points right up in here, and then of course you got the all-time high. So Google, depending on how hot and heavy it gets on its trading, it could very well get up there next week, but that would probably be a stretch to get all the way up there next week. So that is it as far as the daily brief goes. Keep after the technicals, stay away from the fundamentals except for just briefly looking at them, but the charts will tell you what to do and when there's a reversal. All the news and all of the talking heads are nothing more than just noise. So if you're a technician like I am, then take a look at the news periodically, but listen to what the charts are having to say. All right, this is Copycat Trader Brian signing off for the weekend, and I will see you guys on Tuesday. Remember, Monday, the markets will be closed. Y'all have a great evening.